We promised it before the break. We're talking taxes here on Peachtree TV. I almost said CBS 46. This is our sister station, Peachtree TV. All right, let's talk about investment properties and rental properties, whatever you want to call them. There's write-offs to be had there, right?
As far as rental properties are concerned, folks often get it wrong in the sense that they think about rental properties being similar to their primary residence. When it comes to rental, it's an investment. It's like a business. So everything is a deduction dollar for dollar against your gross rental income. One of the biggest things that I oftentimes see folks missing when they try to do taxes on their own is missing depreciation, which is your capital purchase. So if you're missing that, you're basically missing the boat.
So you can write off depreciation on a rental property.
If you buy a $150,000 property, or 50 or 200, whatever the number is, you get to depreciate that over 27 and a half years, and you got to know how to do it and compute the cost basis correctly. But yeah, if you're missing that, then you're really.
By the way, you can also do that if you're a sole proprietor on your car. If you buy a car for business, can't you write off depreciation also?
Well, it depends. Yes,
on certain spots.
If you're sole proprietor, going back to the mileage, so it's either you're going to take either the standard deduction of 54 cents a mile for 2016, or you're going to take actual expenses. But you can't do both, which folks do all the time, and they get in trouble. That's where Uncle Sam will get you into an audit. You got to hire
Andrew to get you out of it. All right, let's talk about the Trump tax cuts. We don't know that they're actually going to happen, but there's a lot of discussion that they might. What has happened in the markets as a result of just the chatter of these tax cuts coming?
Well, I don't know if you've been watching the market, but things have been looking pretty up over the last.
It's been a nice month and a half.
Last 3 months actually. Things have been pretty nice. So, if you look at the market, right before the election, there was an indication. I remember the day of the election, once the results came in, and it was looking like we were going to have the election go one way versus another. You kind of saw the market futures didn't look so good, but then after that, we've kind of seen just a constant uptick in the market.
Where do you see as good spots to be in the market right now? It's turbulent, obviously.
Well, to me, I'd say you definitely want to be diversified. I mean, as a wealth management individual, I think you can't beat diversification. However, I think there's a lot of talk about infrastructure. There's a lot of talk about, financial companies. With regulation being rolled back a little bit as well. So, I mean,
they've had a nice run.
They've had a nice run for sure.
On rumor. What do they say? Buy the rumors, sell the news.
That's it.
So, things have looked good, but I think you can't go wrong if you're diversified.
All right. Any last minute? You got 20 seconds. If you got one thing to tell folks out there, they need their taxes done. What do you need to tell them? Where can they find you?
Give me a call, 770-938-6300, or online at savvytaxguy.com.
Savvytaxguy.com. You got a plug?
I don't have a plug, but if you do need some wealth management advice,
Google you, right?
Google my name, Manka Kaur, and it's 404-995-8671.
Awesome. Well, thank you guys so much for being here. Have a wonderful rest of your weekend, and we'll see what the future holds with you all. Have a great day, everybody.
Thank you.